Hello, hello. Welcome to another market review session with the Market Trader. Today we are going to review markets, review the market from earlier today, specifically the New York session, and review a couple of trades that I took in the markets, as well as kind of arrive at sort of the kind of a general view of the market as we head into tomorrow's trading. Okay, so we're going to go ahead and start in here, guys. So let's go ahead and display my screen here. So we're going to go ahead. Okay, we're going to start with the most recent trade and then kind of work with the, well, actually, let's start with the trade that happened earlier today in the gold, and then we'll come in and talk about the trade that I took later. Okay, so all right, so let's go ahead and kind of play this back here a little bit. Good morning, Marie. All right, so we're going to go ahead and start new here, and we're going to kind of maybe start off here. Okay, all right, let's close this off here. And I always definitely want to stay. Hey, Callum. And we'll go ahead and minimize this. Okay, so guys, just to kind of recap here, we're normally we would have this session on Discord, on the Discord server, but given kind of the Top Step X kind of platform issues that we've had of late, I decided to kind of move it to my own YouTube channel here, just to kind of avoid some of the I guess support questions that we've been getting of late. Okay, so what I'm going to talk about to start is I'm going to talk about hey Dirk. So we're going to be talking about a couple of trades I took in the market today. One in gold, one in the YM. And then we'll turn our attention to more kind of general markets and seek, basically look for, kind of provide kind of general feedback on the market as we prepare tomorrow here. Okay. So as you can see here, I'm going to go ahead and leave my channel there. But so you might imagine the trade that I ended up taking here in the gold market. Now, the gold market has been a market that's been a little bit of a challenge of late. And I would say mainly because of the fact that we've been in some sort of range here now, right? But not the charts. Okay, let's see if I can enable the charts. Okay, hopefully you guys can see the charts, Marie. Now, just wait here for a minute. Okay, excellent. All right, so as you can see here of late, okay, we've been kind of challenging the highs of the session here, and we did manage. It appears that we did manage to close the day higher. I don't know if we actually broke above. If we didn't break above, let's see. We got an open here of 43.71, and we have a close here of 43.73. So technically, we closed above the range here. Okay, so that's kind of indicating that maybe there's further upside in this market. Okay, so kind of moving into kind of the time frame here. Now, I was kind of looking for an opportunity, maybe an extension in one way or the other, but as you guys know, that the market has been in somewhat of a range here of late. So I was looking for kind of a range opportunity, okay, in the gold market. And let's see what this next 15-minute candle here. So you can see here that there was a little bit of a slowdown in momentum, right? We established the initial balance range, but then as we got to it, you can see that there was a little bit of a slowdown in the momentum to the downside. Okay. Now we did manage to get a wick. We did manage to wick out of the range. Okay. Did manage to wick out of the range, but not close below the range. Okay. So this candle right here, okay, was an indication. You see, we got a nice 3-bar reversal pattern up against the initial balance low. And that offered me, again, an indication that maybe there was an opportunity to be had here in this market to the long side. And basically, what I was kind of anticipating, since the market was in some sort of range, and again, this is not necessarily my forte, range trading, but given the circumstances, felt that there was maybe too good of an opportunity to necessarily pass up here. Okay, all right. So let's take a look at the 2-minute. You can see here we got our break of a candle here. We got a break of structure. Okay. Right. So I don't know, maybe this was this candle or the very next candle. But in any case, I believe I got in on the break. You can see this candle broke above this line here, right? So you can see this resistance line that I've drawn here. We broke above this resistance line and we retested the resistance line from above. The other thing that I want to mention is that you can see, right, that you see that we got a fair amount of volume in the direction of this trade. So I believe I got in right around this level at 43.66.5. Okay, somewhere in that range. So my entry was here, right? So 43 entry, 43.66.5 or 6.5. Okay. Stop loss was, technically would needed to be moved here down below, but certainly below the 9 EMA here. But the idea here is that the expectation that I had here is that I was expecting a range move, meaning that price was going to retrace back. Now you can see here on the 2-minute, it created some nice structure here, right around the initial balance low, right? You can see that we created a little bit of a demand zone, right? We got a little bit of reaction away from IB low. I'm going to go ahead and draw this in green. Okay. So you can see here that we got a, yeah, that is a resistance line from a higher time frame. That is correct. So we got a break above, right? I had identified this level and I basically said to myself, if I can get some volume to come into this level, right? In this case, 43.64.8, right? Then I would be interested in taking on a long trade. Okay. And as you can see here, the very next candle, we kind of tested that level and found some more buyers. Okay. And basically what I was targeting is the other side of the initial balance range. Okay. The other side of the initial balance range up above here at 43.79. Okay. Now, since this was kind of an initial balance trade, I didn't trade, and this, this is kind of, again, not necessarily my, kind of the type of trading that I generally take on, but on occasion I will take kind of a price action kind of trade, and I treat this more of as a price action kind of trade. Broke some resistance, tested the resistance, become support, and then basically I was looking for an opportunity here. So I traded this with some micros. Did not trade minis on this. But in any case, you can see here that we got a nice, once this candle kind of retested that area, we got a nice, kind of extension move right here, right? So 43.66 up to 43.68 in one single 2-minute candle. And then you can see here that we got a little bit of a pushback, another retest of the 9 EMA. Okay, another little deeper test of the 9 EMA. My stop in this case was below VWAP. Okay. Right. And so basically we kind of, this was kind of a grinder here. Okay. We grinded to the upside. Okay. All right. So this was kind of maybe our first indication that maybe we should consider, taking some off here at 43.68. I think, right? So it's kind of holding the 9 EMA at this point. And you can see here that the 9 EMA kind of served as kind of a nice area to continue, right? Again, same kind of theme here we talk about all the time, right? The 9 EMA serving as, kind of an area of confluence. And I basically exited the trade here from 43,665, and we exited the trade here at 4370.3. Okay, so about not quite 4 points in this market. Okay, but that was kind of the extent of the trade. Again, like I said, while my target was a little bit higher, right? Kind of managing this trade with, as you guys know, we either with my channels or with my 9 EMA. In this particular case, I got both, right? I got a close below the 9 EMA and a close below my channel. And there was really no reason for me to continue to hold, even though bounce off IBL, determine your bias, break of existence led you to pull the trigger, risk below VWAP and target. Yeah, exactly, Marie. Exactly how you phrased it there. Okay, got a nice little reversal, right? A failed auction kind of thing, right? We got an attempt to go lower. In this case, initial balance low served as kind of our area of support. Kind of watched this for a while, saw that price, was able to break some structure here to the upside. And then my final, was when it broke this area of resistance. I felt that the market was at least temporarily moving to be a bit more bullish. Okay. I think this eventually, if I'm not mistaken, actually made it all the way up to the other side. I'm not sure. Yeah, eventually made it to the other side of the market without me. Okay. But again, I trade my process, and this could have easily continued in the opposite direction. I have no way of knowing that the market is going to continue, even though I had expectations, right? I had expectations that the market could conceivably go. I still have to manage the trade using my processes, right? Okay. So in any case, successful trade, like I said, almost 4 points, in this trade. But I didn't necessarily trade, my normal 2 minis. Okay, this was a micro trade. Okay, I traded I think about 5 micros, basically half a mini on this, and basically secured 4 points, or about maybe slightly over, a couple $100 here. Okay, all right. Any questions? Any questions on the context? Any questions on the reason for the trade? Okay, this is again a range. I was playing the range. In this case, I was playing the initial balance high, initial balance right. So we got a little bit of a sell off down to initial balance low. Found an area that was an extreme. We get some indication on our 15-minute chart that this was going to be an area of support. Okay, and the market in turn rallied right from that area. Okay, all the way to the other side. Okay, now if I was, if I was a little bit more inclined to hold, then I would probably be obviously better served in maybe watching this on a higher time frame, right? And in this, instead of watching this on a 2-minute, I would probably have been better served if I had watched this on a 15. But again, I'm more of a momentum trader, right? But momentum in this case was inside initial balance, and I was basically using the edges of initial balance to kind of serve as my springboard for this trade. Okay, so that was trade number 1. Okay, any questions on trade number 1 before we move on? Just gonna pause here for maybe a few seconds here, see if there's anything questions. Make sense? Okay, Marie. All right. Now, the second trade was something that I look mainly in the equity markets, and my focus was on the Dow. Okay, and I don't know if anyone was kind of following my comments in between some of the other comments that were being made in the channel, but I was mentioning in the channel that I was looking for an opportunity to take on maybe a bullish opportunity in this market. More of a I would say more of a mean reversion type of trade. Okay, But what do you think? What do you think? Right? What do you think I was waiting on? Hey, David, what do you think I was? What do you think I was waiting on? What was it? Did anybody catch my comment that I made in the Coach Ray's channel? Right. So I was basically looking for a mean reversion trade. Okay. I thought that the market was a little bit extended to the downside, and rather than participate in a continuation move to the downside, I was trying to pick a location where I could potentially take this market back higher. Okay. Right. But I needed to see some evidence. And the specific evidence that I was looking for, I needed to see price get above what level? Yeah, I needed to see price get above my 9 EMA. Okay. Above my 9 EMA. So there's my candle, right? That candle right there, right? Right? That candle right there gave me the confidence that I could at least entertain a trade to the upside. Now, do I know for a fact that it could reach all the way to the other side of the initial balance range? Not initial balance, all the way to initial balance low. Did I know that that was a fact? Was that like an absolute, or was that just my conjecture? Right? No, there's no way of knowing, right? It was just kind of my conjecture. Yeah, no, I'm not a wizard. I'm not a wizard. Yeah, it was kind of my conjecture. It was my hypothesis, right? So once I saw price close above, right? Once I saw price close above my 9 EMA, I was willing to entertain a trade. Now, the nice thing about this trade, okay, is again, there's not a whole lot of, again, I'm trying to position myself, right, in opportunities, right, that offer good. Yeah, it's a low risk trade, right? I wasn't sure this is going to work, but I knew that what was going on, right? What was going on during this time? What can you tell me about the more recent candles here, right? We got a nice solid move, right, to the downside. What can you tell me about these set of candles here? Well, it was still making lower lows and lower highs, but it was laboring, right? It was laboring, right? It moved from directional to chop, right? The amount of effort to continue to drive price lower, the sellers were having more and more difficulty, and as a result, buyers were becoming a little bit more and more confident, right? Okay. So I entertain again. So my risk reward on this, right? Again, if my target is IBL, my stop is below, right? I'm looking at a nice 3-to-1 risk opportunity, right? I'm risking 1 for the potential of 3. Now, again, do I know for a fact that price was going to reach that level? I don't. But the amount of risk the amount of risk that I needed to take in order to support this trade is much less, right? Now, could I have entertained a continuation move to the downside? But what problem do we have in maybe looking for maybe a continuation trade to the downside? Am I paying a premium for that opportunity, or am I paying a discount for that opportunity? If I think that the market still has some downside, am I paying a premium or am I paying a discount? I'm paying a premium, right? I'm paying a premium for that short, right? So a good amount of risk involved in it's not very clear. Yeah, definitely a discount for longs, right? Definitely a discount for a long. Okay. So once I broke above the 9 EMA, I dropped to a 2-minute chart. Okay. And I believe I got in as soon as that candle broke to the upside here. Let's see if I can change 2 minute. No, not 2 months. Okay. All right. Move to my 2-minute chart. Okay. We'll go ahead and remove this here. So my entry was made around this 23, 27 level. You again see what's the common denominator in all of this? You can see that price is starting to respect what? Right? It's kind of overlapping to the point now, right? It's starting to respect the 9 EMA. All right. So, and it also reversed off. I that was kind of a secondary thing I wasn't even looking at. Let's open that up. ADR. There's our ADR low. Okay. Okay. All right. So entry was this 48,327. Okay, that was my entry. Entry 43, no, not 43, 48, 327. Okay, that's my entry. And then basically you can see these lines. Do you guys see these blue lines that I've drawn up above? Right. So why did I draw lines there? What's significant? And actually, you know, I might actually change the color now that I'm here. Why did I draw these lines? No, they're not quite EMA levels. Yeah, these are, so what do you see on the left-hand side? Do you see that maybe sellers were present around this 383 level? Yeah, these were my target prices. Exactly, David. And why did I make this my target price? Again, this is probably a little bit more, again, this was a mean reversion trade. Now, ultimately, I thought maybe it could come back to VWAP. But that was probably a little bit too much to ask. Yeah, it's basically areas where sellers were active in the past. Okay, so this was my target number one, right? This is kind of more target number one. Yeah, an order block, a set of order blocks where we got maybe a little bit of a balance in trade here, right? And then I have, let's see, remove this here. Then I have target number two. I don't think we made it to target number two, but we're just going to mark it here. Target number two. Okay. All right. So now again, entry here. Let's use our long short tool here. Okay. My entry here, my target is up to VWAP. I mean, I thought it had a reasonable potential of getting there. And then my stop loss is probably below, you know, kind of this 100% extension of the initial balance range. And what is it about this? What is it about where VWAP is currently located? What confluence do I have in that area? It's also what? One is close to a 3-to-1 opportunity. Two, I have a confluence of settlement. Yes, settlement and VWAP. Okay. Now, guys, are you sensing a little bit of a theme in my trading today? Right. So I'm just kind of I'm adjusting to what the market is telling me. Right. The market was pretty much down for most of the day. Right. We get to a point in the market where we start to see maybe that market might revert. Okay. So actually, let me check a couple of things here, because I think I got involved in this opportunity a little bit lower. Okay. So this opportunity actually, as I look at the times here, I was involved somewhere in this area. Okay. Somewhere in this range. Now, this was a much smaller trade. Okay. And I say that because I knew that at the top of this time here, right around 3 o'clock Eastern time, I was, I think, flat on this position. Okay. So I believe I got involved somewhere in this range here. Okay. So my involvement was somewhere in this range, right around close here. Let's call it 43,308. Okay, 43,308. Let's say on this break of this candle. Okay, took a little bit of a little bit of a drawdown. Okay, but basically, again, this is more of kind of a 308, 43,308. And got involved and kind of exited this trade here up at the oops, I always do that, somewhere in this range. Okay, this was, I don't know, exiting this position, trying to see if this was actually gave us another move higher. I don't think it did. No, it went down after that. Okay, so I was involved in this move here. Okay, break of channel, pull, and then exit at 317. Again, entry was probably closer to this level down below, 295, right? And my exit was, again, leveraging this area right here. Okay, so 300, 295. Okay, somewhere in that range. Okay, and then I do recall exiting this trade at the top of the hour. Okay, right around the 316 level. Okay, not a huge trade. Again, expectations that I had were that it was had the possibility of maybe heading back up to these highs. So this was more of kind of a scalp opportunity. In hindsight, right? But I felt that there was maybe a possibility that it could return back to the highs. Turned out that the market was relatively weak. So it just, my channels indicated to me that it was time for me to exit. Okay. We exited the trade for a small winner in this case. Okay. And this was more of a mean reversion type of trade, not the easiest trade to hold. I'm going to be honest. Okay. But it was a trade. It was a profitable trade nonetheless. Okay. Yeah. The channels basically, again, you understand me by now, right? The channels are my guide, right? The channels, as long as price remains in the channel, I'm in the trade. The moment the price closes out of the channels, I'm out of the trade. Okay. Right now, some of you might say, well, why didn't you enter short? This would have been a reasonable short, wouldn't it? Right. And am I taking less risk? Am I taking less risk by taking a short up at prior areas of resistance? Isn't this area up here an area of resistance up above? Where did price stall? Exactly in those areas, right? Right. So in hindsight, again, if I had to critique myself, I probably would have been better served in looking for an opportunity for a continuation. But we don't know, right? We don't know what the participants are going to do with this market. I found a relatively, good opportunity that would lead me with the potential of getting up to some of these highs, right? But if it's not in the cards, it's not in the cards, right? I could have easily, been patient and waited for an area of resistance, waited for my my channel break, and that would have offered us a kind of a nice swift move to the downside. But when I'm in these kind of ranges, I'm not necessarily banking on strong moves, right? I'm looking at, I'm more sensitive to areas that indicate to me that there might be some opposing participants, and I have to be prepared, right, to exit the trades accordingly if those issues kind of present themselves. Okay, so those were my two trades. Again, one, this was a single mini MYM trade on the Dow. Again, I think it's $105. I think I scored on that trade, and then the 200, and then close out the day for a little over $300. Okay, in this market. Okay, all right. Yeah, I was 2 for 2. Yeah, process, right? Okay. All right, let's take a look at kind of a general overview of the markets and see, again, kind of from my lens, what kind of opportunities presented themselves today. So we're going to go ahead and start with the 15-minute chart, and we'll go ahead and remove some of our drawings here, and we'll take a look and see what kind of opportunities presented themselves. Well, like I said, today, gold was pretty much a range kind of market, right? Didn't really offer us much in the way of extensions. So unless you deployed some range kind of strategies into this market, you probably were left kind of waiting, right? A lot, because we never got an extension, or at least able to hold an extension outside the initial balance range, right? So like I said, we've already kind of talked about this trade that I took here, right? That was a kind of a failed auction to the downside, and was able to take a piece of this move here in the opposite direction. Okay, and then we talked about the Dow offered us a mean reversion. So let's take a look and see what we can what other markets offered here. So this one, we have the NASDAQ. Now the problem, what was the problem? What was the problem in participating in this trade? It did offer us a very nice extension to the downside. Yes, everybody agree, right? Nice little 15-minute extension to the downside, right? Yes. Anytime we're in sort of a range kind of market, generally we need. Yeah, there was no entry here, right? Didn't really provide us an opportunity to enter this market, right? There was no pullback to 9 EMA, no pullback to the IB low, right? None of that, right? So if you were going to take part in this, you basically needed to, follow the candles, and that for me is kind of not something that I'm willing to accept. Okay, you scalped this on a 1 minute. Okay, all right. Now again, guys, and this goes for David as well. What was nice? Okay, what was nice about this? And I'm looking at this on the 15, but what was nice about this? Did we not get an indication here with price closing below our 9 and our VWAP and below our settlement early in the session, that maybe the market was looking to go lower? Do you guys see a theme? Right? We see price close below our 9, below our VWAP, and then we got a little bit of a retracement back to our 9 and back to our VWAP. This could have been a reasonable ORB trade, David, but this could have been a reasonable ORB trade, right? So if I turn off initial balance here for a moment, right, and let's just go ahead and manually draw this. We'll just go ahead and leave and then come back. Replay. We'll start new. Close this down. Okay, right. So this is the first 15-minute candle. Okay, let's play that forward. Okay, so we got a 15-minute candle to the downside. Yes, right. So I established the opening range. Let's see, move this down here. Right. We'll remove these other red candles so that it doesn't confuse us. And then we drop to a 5-minute chart. Right? And we basically wait, right, for a candle to indicate that it's time. And I don't know about you, but this probably wouldn't be the candle, right? Do you guys understand why I wouldn't necessarily be inclined to enter on this candle? You guys all understand that, right? Okay, this candle, yes, right? So this would be my entry candle. Yeah, long wick, buying wick. Now, if I see a long buying wick and they're not able to create a bullish candle after that, is that a positive sign to entertain a short? They made an attempt to take it higher, yes, right? They made an attempt to make it higher, but did they even manage to even sniff the close above 25,317? Didn't happen, right? Okay, so if this is an ORB trade, right? Well, we enter. I don't know if anybody took this trade, but we enter at entry would have been 25,286.50. Okay, that would have been our entry, and then our stop loss would probably need to be, I don't know, this is probably too rich of a stop, but certainly ideally would be somewhere above this 9 EMA. That would be a reasonable stop for me. Okay, right around this 25,360 level. Okay, right about in this range. Let's call it 25,361. Okay, stop loss. Everybody understand why I'm choosing that stop as a stop, correct? Any questions as to why? Hopefully that's clear. Okay. Okay, awesome. And then my target, again, if I didn't have anything else to the left of me, you know, having this ADR down below is a reasonable target, right? So target at ADR low would not have been a bad target, right? Yes. Okay. Now this is maybe slightly just kind of eyeballing this. This is slightly above, you know, 1-to-1 maybe. Okay. Yeah. So 1.2 to 1 trade. Okay. Ideally, we'd like it to be 1.5 to 1, but you know, at least is above 1, right? Okay. Kind of play this forward. So again, we get a retest. Hopefully it didn't take me out here. Nope. Okay. We retest the 9 EMA. And eventually, I think eventually, got to play this forward. It didn't give up easy for sure. Then we eventually get our move, right? Probably a little bit of anxiety created here. But guys, again, notice, did price ever close above our 9 EMA? It wicked above. It wicked above our 9 EMA, but never closed above it, right? So as long as we're comfortable with the risk, right? As long as we're comfortable with the risk and it's not going to blow up, right? I gave a couple of, yeah, it did. It gave a couple, right? But the key here, Dave, is that we never got a close above, right? That's why I like the 9 EMA so much, right? Because doesn't the 9 EMA isn't the 9 EMA giving us a clear understanding of where we're right and where we're wrong? Right? We could do a lot worse in managing our trades, right? All right, let's continue. Okay, and then we hit our target number 1. We smashed it, right? At this point, how many people, if the way I map this trade would take their profits? How many people would take their profits at this point? We smashed it, right? We got our close, a little bit of okay, so David would be more than happy in taking a trade from 25,286.50 all the way down to 25,140, right? Or maybe we drop to a lower time frame chart, right? Now that we've hit our target, okay, and then we draw our channel, right? We draw our channel, and as long as price remains inside our channel, we stay in the trade. And soon after that, okay, I don't know if that would actually gotten you exited. Maybe not. We'll see. Okay, this actually maybe would cause me to adjust my channel here a little bit now that I got guys. Do you guys understand why I'm adjusting my channel now? I drew my initial channel. I got a wick. I got a wick outside of that area. Does everybody understand why I adjusted? Yeah, it expanded my channel. You guys understand why? So do you understand why I adjusted my channel as a result? Yes. Okay. Because again, my original channel would have caused only a wick, right? It only wicked out of this area. So since it wicked out of this area, what is that indicating to me? That there are still sellers present, right? Sellers are still interested, right? Yeah. So we poked outside. So that gives me the permission to adjust my channel, right? Because I know that has now established an area of rejection. Low ball. Is that right? You with me? Okay. So we'll continue to hold. Okay. Now, I don't know. Does that maybe this is not the perfect channel here. Okay. So we probably need to start thinking about possibly exiting, correct? Right? This candle here is showing a little bit of strength, isn't it? Right? So we're kind of horizontal, and then that gives us the final indication that it's time to skedaddle. Yeah. Okay. So this would have made for a very nice ORB trade. Okay. It had all the elements of, once we got priced into a channel, once we hit our initial target, right? It offered us a continuation move, right? So we got in around, 25,286, and we ended up exiting this trade at 25,081. How many people would be okay with that as an ORB trade? We would be okay with that, right? Right. And the nice thing again is that I let the channels speak to me. Okay. Well, there's probably a similar opportunity in the ES. We'll take a look at that as well. Right. Probably a similar opportunity existed in the ES. Okay. But the nice thing is, again, the channels provide me some objective criteria, right, to decide whether I stay in or exit the trade. Right. There's no kind of decision I need to make. Right. I look at my chart. Am I inside a channel? Yes. Then I stay in the trade. If I close outside the channel, it's time for me to exit the trade. Right. Okay. Let's take a look at the ES. I suspect the ES offers a similar opportunity, almost to the tick. Right. I mean, I don't know, guys. This looks very, very familiar. If I didn't tell you that this was the NQ, I would say that this is NQ. The only reason I know this is not the NQ, I'm looking at different prices here, right? So again, we draw our 15-minute range. It's also under our 20 SMA. Now, is VWAP and the 20 SMA, aren't they very familiar? I thought the VWAP was like a 21-day. Let me open up the SMA 20. I thought the 21 or the 21 or the 20 was the same as VWAP. All right, but I could be wrong. Okay. Yeah, it probably would be wiser to look at the EMA, right, on the lower time frame, right? Because we want it to be a little bit more responsive to price. So let's change this to the 21 and see. And it's basically almost the same line, right? So we'll change the color here. So change this color to something gold, maybe gold, not gold, maybe yellow, right? So, I mean, slightly different, right? But the 21 EMA is kind of giving us the same indication, right? So again, when we replay this back, okay, leave, and then we'll go back, replay this, start new. We'll go back to our original open of the market here, right around this candle right here. Okay. Go ahead and close this down. Open this up here. And then I think the very next candle here is our 50-minute candle. Pretty wide range, yes? You guys see that, right? So I manually draw, right? I manually draw my opening range, top, bottom. Okay. I drop to my 5-minute. Okay. There's my range. There's my potential target down below. And basically, I'm waiting for a candle to indicate it's time to enter. Okay. Did not get it with that candle. Okay. Still no entry here. A lot of back and forth going on. There it is, right? So there's our trigger candle, right? We enter right at right entry at 6844, right? Stop loss probably above our VWAP, maybe at 6859, right? Stop loss at 6859. Target price down at the edge of the initial balance range, or not the initial balance, ADR low. Okay, target say 6812. Okay, now this looks a little bit nicer to me from a risk reward perspective, right? Because now I'm looking at more of a 2-to-1, right? If I enter here, my stop loss is here. Stop loss is here. Target is down here. Well, that's a nice 2-to-1 risk reward opportunity, right? So there's even more reason to entertain this trade. You guys with me? I'm risking 1 to make 2. Anytime I can risk 1 and make 2, it's an opportunity I should consider, right? Now, what else are some positives to this trade? Did Price have trouble getting back above settlement? Did Price have trouble getting back above settlement? You guys see that gold line? This is a statistical range, Everett. This is ADR. This is a what we call what is called average daily range. And I use this this tool by Diademi, and basically it takes the highs and lows and averages them out. Right? It stayed below everything. Right? Does that answer your question, Everett? Do you understand what this is? This is a statistical level on ranges. Yes. Okay. And you can see the market quickly went to our target. Okay. Nice little extension, right? Nice little extension from the opening range. Now, opening range breakdown, right, is very similar to our initial balance, right? So instead of waiting for an hour like we normally do, you can wait for 15 minutes. And I think 15 minutes is a reasonable time, right? to look for a trade along these lines. Now, does it always work? No, but anytime I can manage my risk, anytime I can keep my risk down to 1 for the possibility of making 2, then it's an opportunity that I should entertain. Okay. So at this point, either I can move to I can either take my trade off, or again, I can adjust my channels here, right? I'm going to add my channels as once I get to my target, and we can kind of continue to hold the trade until I get a close above, and I'm out of the trade here at 68.15. So from 68.44 down to 68.15. Now, again, nothing that I did here, right? The market is telling me when to enter. The market is telling me when to exit. The only thing that I'm doing is making sure that the risk is aligned with the opportunity, right? As long as risk is aligned with the opportunity, I should be inclined in taking that opportunity. Okay? Any questions on the mechanics behind this trade? Again, this is an opening range breakdown. We draw our 15-minute range. We wait for an indication on the 5-minute. We get our indication. We enter the trade. And then the channel basically tells us when to exit. Okay? Any questions on this? Very mechanical, right? Very mechanical. So if you're struggling with a strategy, right? If you're struggling with a strategy, you can do a lot worse than work with a strategy like this. Does it work all the time? No, right? But neither does the IB extension. But yeah, it's reliable, right? Okay. All right. So we talked about NQ. We talked about the ES. Low ball looks like took a trade along these kind of lines, if I'm not mistaken. Right? I don't know exactly what low ball prices were, but hopefully got into something similar. Okay. Okay. All right. So let's take a look. Let's take a look at crude oil and see what opportunities crude oil provided to us. Today was, if I'm not mistaken, EIA today, but I don't think EIA really offered us all that. Well, actually, it looks like late it did offer something. Wow. The moment I shut down, I was looking for an opportunity in this market. And this 3 o'clock time frame is when I shut down the computer. Okay. And lo and behold, when does crude oil decide to move? When I decide to close my computer. This was the trade of the day. Yeah, this is a very nice trade, right? So so everybody understands. So like this was pretty much a nothing burger, right? Nothing really to do here, correct? Right? We got our report. Our report initially pushed us lower, but then we kind of oscillated here, right? Until we got to the last hour and a half of the session, and we got a nice extension, right? Now you could have traded this one of two ways. This is probably more of a price action kind of opportunity, right? You wait for a price to extend the channel to the upside. You could have either entered here, probably a little bit more aggressive, right? This is probably a little bit more aggressive. We enter, we got some volume to come in here right around this 56.18 level, right? That's entry number 1, right? And then entry number 2 would have been what? What's my entry number 2 possibility? Entry number 2 is a break of the initial balance range. Now, I don't generally look for an extension of the initial balance so late in the session, but given the fact that we had a news event, right? Given the fact that we had a news event that came into the market into the session, right? That actually serves as a catalyst, right? So that served as kind of the catalyst. So somebody maybe read into the chart, read into the EIA a little bit, and said, you know what, this is maybe a good time for us to enter the market. Okay, so entry number one, probably a tad aggressive, because why is that a tad aggressive? The reason it's tad aggressive is it did not break my balance range, right? It did not break my initial balance. It was still inside initial balance. So we could have easily gotten a rejection right at the initial balance high, right? Just like we did here, right? We got to initial balance high and we rejected the highs. But in this particular case, the sellers, I guess, did not seem inclined to oppose that move. Okay. So could have entered here. And again, managing this trade, with the channel, right? So if our entry is here, our channel is up here, and we exit the trade here around 56.70, entry possibly at 56.17, and that would have made for a nice, almost 60 tick move. This is a $600 move on a single mini. Okay, this move right here is a $600 move. that would have made for a nice move to close the session. Okay. Right. But the catalyst in this case, as you mentioned, Marie, this was kind of EIA. The initial reaction was lower, but they weren't able to take it much lower. And then we started to see right here, right, that looks like some aggressive buyers started to step into this market. They tried to take the market lower, again, received with more buyers. And we eventually got to the highs here around 56.75. Okay. But not the initial balance, kind of extension trade that I look for, right? I usually expect those kind of trades to happen a little bit earlier in the session. All right. War news was the catalyst for this. Okay, that's possible, right? Maybe the perception that maybe crude oil was going to be, crude oil inventories were going to be impacted by some of the war news. That's certainly possible. Okay. All right. Any other markets here, guys? Any other markets that you'd like me to take a look at? We've already talked about the gold. We talked about the YM, the NASDAQ, the ES, and now crude oil. Is there any other markets that we want to take a peek before we call it a session? Silver? All right. Let's take a look at silver. Let's trade the regular mini contract. Okay. Let's see. Yeah. So this one probably a little bit difficult. Again, we got our extension to the upside. Right. So if I start new here, we got a nice 15-minute candle to close the range, right? Now, if this is going to be, if we, our thought process is, okay, I just broke the range. It came in with a good amount of volume, right? Good amount of volume came into this candle. The expectation is that we could potentially head higher, right? The key is that we wouldn't want to see, you caught that break, all right? What we don't want to see is we don't want to see price close back inside initial balance, right? So we drop to a 2-minute chart, right? We drop to a 2-minute chart, and basically what we're looking for, ideally, right? We're looking for some sort of pullback. I don't know if we get it here, but we'll take a look. Some sort of pullback, okay? And then we are looking for our entry. Okay, not with that candle. Wow. How many people would be not the strongest of candles here? Yes. Pretty meager candle. Let's see. Next one. Still nothing. Maybe that caused me to kind of extend this channel here a little bit. And then this candle probably would have triggered me in. Okay. Does everybody understand why this candle wasn't all that impressive? What, right? Everybody understand why this candle wasn't all that impressive, right? To enter long. Look at the volume. Is the volume aligned with the general direction I'm looking to go? Yes, yes, Sinclair. We need 10 more subscribers. Call your friends. My goal remains, guys. I'm trying to get to 1,000 subscribers by the end of the month. Okay, but everybody understand why? So, guys, do you understand why what I'm looking for here? Right? If I'm looking for a breakout trade, do I want to be a part of a breakout trade in an upward direction with bearish volume? I don't want to be part of a breakout trade in bearish volume. Yes? I want to be a part of a breakout trade when I have bullish volume, like this candle. Okay? So my entry would have been 66,630, right? 66,630, right? $66,630. Stop. Well, the point of invalidation for me would have to be somewhere inside initial balance, right? Somewhere maybe 66,340. Now, guys, we don't really want to get too cute with our stops, right? We don't want to be like two ticks below the IB high. Why would 2 ticks below the IB high be a bad thing? Why what is wrong with placing a stop 2 ticks below IB high? Two ticks below IB high, you are opening yourself up to what? Yeah, price could easily reach there, right? Our stop losses should be points of invalidation, right? Yeah, did I not? Did I was part of the stream, I believe. I came in a little bit later than normal. Yeah, you increase the likelihood of getting stopped out. Yeah, it has been known to recheck IB, right? So you want to give it a little room, right? And if you want to use something like ATR to kind of help guide you, right, on what the stop is that it should be at that moment in time, well, you can do a lot worse, right? So this is telling me that my stop loss, if I'm going to go with 2 ATR, that needs to be 34 less. 34 less. So right around here, right? It is telling me to place my stop right around this level, right? Now the low of this candle is 66,385, right? So 66,340, maybe 66,335. That might not be in a bad area for my stop. Okay. Now, where's my initial target on this? Where's my initial target on this? If 66,630 is my entry, my stop we've already talked about. My target needs to be what? What's the red line? Yeah, the 67s, right? The 50% extension or the 100% extension, right? 67 is a whole number, right? So target 67, at least initially, right? So we'll see. We'll play this forward. Okay, kind of grinding here a little bit, came back down, kind of retested the initial balance low, a high, I should say, and then eventually kind of grinded its way to our target. Target reached. Okay. Target reached. Yes. So what do? Once we reach our target, we draw our channels. Now you can either manage this with channels or you can manage it with the 9 EMA. That's kind of investor choice, trader choice. And we continue to hold this trade. Again, I'm more focused with bodies of candles than wicks. And we hold on to this trade as long as price remains inside our channel. We get our close below the channel. So we exit the trade at 66,955. So I don't know if this actually continued higher or not, but holding the trade from 66,630 all the way to 66,945 does not seem to be a bad move. Yeah, so you have to be comfortable with the risk, Everett. You have to be comfortable with the risk. And if the wicking of candles affect you, what do you think I'm going to tell you, Everett? If the wicks of the candles are affecting you, what are you probably doing? You're trading what instead of what? No. You're probably trading dollars rather than process. You follow what I'm saying? You're trading scared money. You're trading money. You're trading scared money. You can't make money with scared money. Does that resonate with people? Yeah, you're trading with your emotions instead of facts, right? So if you are not comfortable allowing this to trade at worst case scenario back inside initial balance, if you're not comfortable, right? If you're not comfortable with price potentially closing, reaching, or maybe coming inside initial balance, if you're not comfortable with that move or that possibility, what should you do? What should you do? If you're not comfortable with, you have to accept both sides, right? If you cannot accept that there's a possibility of taking a loss, yeah, either you need to reduce your risk or not trade it, right? Either not take the trade, look for a better opportunity, or deleverage. Because if wicks are affecting your mind, right? If wicks are affecting your mind, you are taking too much risk, or you're trading your dollars rather than your process. Okay? Right? Because again, the process says that as long as price remains above our initial balance high, we're in a valid trade, right? Right? As long as price remains above our initial balance high, we're in a good trade. The point of invalidation is if we get a price to close back inside initial balance. Okay? Right? So we close out of the trade. I don't know if this actually went any further. Might have. Looks like it did. Okay? If it closed below the 9 EMA. Now guys, did I lose some money by what would be the scenario here? What would be the scenario here? I get a signal here, right? But price is still above my 9 EMA. What do you think I'm saying to myself at that moment in time? What do you think I'm trying to do? What do you think I'm trying to talk myself into? Yeah, you gave back more profit than necessary, right? What do you think? What emotion do you think might be in play at that moment in time? Price is above my 9 EMA. I'm 9 EMA. I just got to close below my channel. What emotion do you think might be in play at that moment in time? Greed. Exactly, Marie. Greed. Oh, we're still okay. So I just gotta close below my channel, but you know what? It's still above my 9 EMA. Right? Still above my 9 EMA. I'm good for I'm gonna hold this trade. Right? So I could have exited this trade at 66,955, but now what happened? Now it closed down to 66,905. Now what do we say to yourself? Do we trust the process and exit, or do we continue to rationalize our way into holding this trade? How many people have talked themselves into holding something when the evidence tells you that it's time to exit? Yeah, if it's invalidated, we need to exit. Absolutely. But have we not? Have we not? I know I have. Yeah, we're trading on hope. We can't trade on hope, right? Right? We can't trade on hope. We need to trade on facts. And if the facts tell us that we shouldn't be holding, we need to exit. We need to be disciplined enough to exit the trade. I'm reading lowball. Maybe it will go higher. Maybe we'll keep going all day. Maybe the big brokers are going to. Yeah, exactly. We start to what? We start to rationalize. We start to make up reasons, right? We start to make up reasons to hold a trade when every indication with price is telling us to do what? It's telling us to exit the trade, right? So, yeah. So again, guys, we need to stay true to our processes, right? We need to stay true to our processes and let it go and get out, right? Something about giving back an entire swing sits really sour after. Yeah, absolutely. Right? Right? Is there any reason that we need to lose on an otherwise profitable trade? Is there any reason to do that? Yes, in channels we trust. Yeah, and then you say to yourself, why did you do that? Because you let your emotions get in the way, Sinclair. Right? Sinclair, you need to eliminate yourself from the equation. Right? The biggest indicator that causes us to lose is the indicator that's between our ears. Right? Right? Don't let the indicator between our ears affect us. Yes, we need to be Spock mode. You've heard me say that, right, Lowball? We need to be Spock mode. Okay? All right. All right, guys. Well, we're coming up on the bottom of the hour. I see that we have my like indicator and my participant indicator are aligned. Happy day for Ray the market trader. Okay. So, guys, yes, the lazy lion. Yes, very happy. Thank you, Everett, for the kind words that you put on the channel. You're welcome, Dirk. So, guys, again, tell your friends about the cool things that we're doing here on this channel. Again, I'm still holding out hope. I got 13 days remaining to get to my 1,000 subscribers, guys. Tell your friends, tell your trader friends, tell anyone that's within earshot. Okay, where are the t-shirts? Yeah. Sinclair, I need to get back to Samsonite. Samsonite offered to do the artwork, but I haven't seen Samsonite of late. Okay, the t-shirts will come once we get to 1,000 subscribers. How about that? Subscribe, like, follow, share, comment. Try it now. You might actually like it. Yes, that's all I'm asking you guys to do, guys, is to subscribe, like, follow, share, and comment. Right? The more we comment, the better we look. The better we look at with the YouTube algorithms, and that will drive more folks to the channel. Okay. I didn't know where else to put it, but for sure, thanks for everything, Coach. I'm glad I checked YouTube. I went to Discord first, and it's okay. All right, Everett. Thank you for your comment. Thank you for your continued support. Okay. All right, guys. Well, that's it. That is it for me. I will close this channel, and then we'll have to see, guys. So tomorrow, just a reminder. Assuming that I believe that's still going. I will be on the opening bell or opening call. I can't remember which. Okay. I will be on the opening bell, opening call on Top Step TV with Coach Jay and Coach Hogue. So you guys can catch me there. Yes. Live long and prosper. Very good. Words to live by. Okay. So you guys can catch me on the opening bell. Again, leave me a like, leave me a post, leave me something positive, indicating to others that, kind of the analysis that we're doing on the markets. And hopefully we can take this, kind of analysis and become more consistent traders as a result. Okay. All right, guys, trade well, trade safe, and trade like a pro. Be a market trader. Have a good night, and we'll talk again tomorrow. Okay, if things stay as planned. Thanks again.